Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away. The market has continued to turn positive and continue the rally from yesterday amid the news of this government shutdown finally coming to an end. And with today's approval from the Senate passing the bill, it looks like that is going to be put in place. So I'm interested to get into the discussion with Rob about the implications that we can expect thereafter among a variety of other topics. So let's go ahead and kick off. Rob, you out there?
Hey, I'm Zach. Hey, everyone. Welcome to TradeFinder Live this Tuesday afternoon. A couple interesting things to talk about. You mentioned the government shutdown, and it does seem like it's probably over with now, but just tiny bit of uncertainty on the House because the Republican majority is not as great in the House. So could it run into roadblocks there? Maybe, but I think pretty much all politicians are ready for it to be over. We're moving into the holiday season. It doesn't serve any party for this to continue. So I do think the market is looking towards that. As we look at the chart of the S&P, we had a gap up yesterday. Talked to our subscribers at Evo Trader Live yesterday about how I don't like these gap up moves and could we get some follow through today? We do appear to be following through a little bit at this time, but as always, the close matters on the directional aspect of this, if it counts as a follow through day or not. Perhaps that gap could stay there for a while as we go back and remind of a couple weeks ago when we gapped up twice. And this is why I don't like gaps or vertical moves, because what goes vertically up oftentimes comes vertically back down. You've heard me say that a lot of times, but this is why, because it works. And those are rules that should be paid attention to, in my opinion. So hated the fact that we gapped up yesterday. We'll see if we can close higher today, which would count as a follow through day. And then perhaps we're headed back directionally to the upside. And while I'm talking about directions, just a quick reminder, if by chance you haven't signed up for the directional prediction webinar this evening, please make sure and do so. Zach, ask him to put that in the chat box if he would. I know that we do a lot of events, educational events at evotrader.com, but I just want to highlight the fact that this one is a little different and unusual in the fact that you're going to have the CEO of Hub on this call, the producers of this software, and also the employer of the AI data scientists. So if there's anything you want to know about how the AI works, how it forecasts directions, he'll tell you as much as he's willing to. They don't want to give away their intellectual property, and I don't blame them for that. But this is a rare opportunity, so it's not just hearing my voice. Again, it's going to be something unique. So this is definitely an event that you want to attend, and if you can't attend it live, then still sign up and register. You can get the recording of it. You just won't be able to ask questions live. That's all. So yeah, I just wanted to highlight that again. It is going to be a an unusually rare event. He doesn't do many of these, so take advantage of it while you can. All right, back to the market. So we'll look and see, and we did get a little bit of a bump up, as Zach mentioned, starting about 11:30. Kind of jumped up at 11, came back, tested at 11:30, and moved higher. I always hesitate on these midday moves, anywhere in the block between 12 and 2, because that's when a lot of traders go to lunch. Some go from 12 to 1. A lot of them go from 1 to 2. So this area here sometimes has less volume and therefore less volatility, and you can get upward moves. So I've been talking about this for a couple of weeks, but it's the last hour of a trading day that matters, and it has mattered ever since, in my opinion, just whatever that's worth, since we had this tariff 2 day, because there was, for selling then, institutions had to raise cash. What are they going to do with it? Are they putting it back to work? Well, it looks like the news Sunday night of the potential end of the government shutdown was enough to where they jumped in. They got to find ways. There's data out there that shows a lot of money managers have not outperformed the S&P this year. That's where their bonuses come from. They have to um, outperform it. And so many people have been waiting for a more significant correction because of the length of this rally that we've had since the April lows, the initial tariff tantrum lows. So performance chasing is going to start to occur. Another reason that I'm a little bit gun shy about today is the bond market's closed today for Veterans Day. And by the way, please let me add my thanks and admiration to any of the veterans that may be watching, or any of you that have family members that are veterans. Thank you for your service. Appreciate it very much. The bond market closes for Veterans Day, but the equities markets are open. And as I've talked about numerous times, the equities markets take their direction from the bond market. So they're kind of left on their own today. So we won't be looking at the TLT or TNX very long today because there's nothing to see on what's going on. So even if we get a close higher than yesterday, that counts as a follow-through day. Could that be reversed then on Wednesday when the bond market reopens again? So always something to think about, isn't there? I mean, it's never easy. Always things to consider, pros and cons, etc. But for now, that's where we are on the S&P. And if we do get a follow-through day, it does look like we'll come up and test that 690 level again, which is where we completed that last zigzag. We've talked about that in the U.S. market updates, even showed you the thumbnails where we called this breakout move, and then 690 is the top. So we kind of nailed those. Came back down. We tested 660 as support, also where the 50-day moving average is. And now we'll see what happens from here. So even if we do close higher today and get what's a technical follow-through day, I'll still be a little bit anxious to see how things react tomorrow when the bond market reopens. If we look at the VIX, VIX has settled back down a bit, as you would expect with the market moving up yesterday. This upper trend line, I just want to remind you, is from the weekly chart of the VIX, not the daily. The daily chart had this triangle over here, which we broke out and came back down, tested the point of the breakout, following all the triangle rules that we talk about over and over again as well. Then we got a little bit of a bounce up here, and now we're right back down, right around the 50-day moving average. If the market continues to rally, I would imagine we come back down to 15. Can we ever break 15 this year? That's going to be the thing. 15 is held all year, even though it was 12 and a half was the low last year. And just slightly elevated volatility has been the theme pretty much for this entire year. One area that is doing pretty well today is energy. If we take a look at natural gas, there we go. There's the move. And boy, I can attest. Remember we talked about how the Farmer's Almanac said that good areas of the country, a good part of the country was going to have colder than normal winter. We're getting it here in the Appalachians. There's an inch of snow on the ground, and the high is 30 degrees. So that doesn't normally happen in November, not before Thanksgiving at least. I'm not going to say it doesn't get cold in November here. It does, but not snow on the ground and a high of 30 over about a 36-hour period. So this is unusual. Does it continue? It is supposed to warm up the rest of the week, but still, that was a rather shocking cold blast that came in over the last couple of days. And perhaps that's helped continue this bid. Or is it just the thesis that I was talking about back here that I thought would occur in September and October, where we just get an exhaustion of the sellers? We've sold the rip every single time on natural gas. We finally created a pretty good base here around 12 and a half, and we're moving higher. I thought we would get up here to 15. We had an upward trade back here in October. We took it off literally on the high there, even though I did feel that 15 was resistance. But just going back here, You think this is it, then sold into, then this is going to be it. Nope, sold into. You get another nice move. You get four straight up days. You got a nice profit. Take it and move on. Even if it turns out that you end up being right at 15, and maybe we will be. Don't have a position on it now. We'll see if it hits that 15 level, and then if it does, where do we go from there? Because there's another potential trade. If we can break above 15, and that's where we're going to be looking at resistance and a follow through confirmation day, all the same rules again, once we get up there. If we break above 15, then I think we probably go up to 17 and a half, and perhaps there's another trade there. So I feel like we kind of got most of this anyway. We just got it early. And we'll see again what happens if indeed we do reach 15. Even oil's getting a little bit of a bid today on the USO and moving back towards that 75 level. Feel like that's pretty much, as I've stated again in ad nauseum. And for those of you that watch week in and week out, I apologize for the repetition, but I do that for a couple reasons. One, when I say certain things and repeat them over and over and over again, it's not that I've forgotten that I've said it before. It's that these are things that I feel are really important for people to think about and consider in their trading decisions. And then the other side of the coin, obviously, is we're constantly adding new people that haven't heard all of my rules in ad nauseum. So thank you for bearing with me for those of you that are here week in and week out and hear me repeat things. So I appreciate your consideration there. On USO, I've been a little bit nervous. We did have a strangle back here. We were able to take it off on this downward move as it was profitable as well. And just concerned, even though support was down here around 65. The thing that's been in the back of my mind is how low will OPEC let oil go before they announce a production cut? They announced production increases when we spiked up. So why wouldn't they announce a production cut if oil spikes down? So they haven't really, to my knowledge. It's just that we're getting a little bit of a move back to that. Yeah, I've talked about the Goldilocks channel in the dollar. Well, that's the Goldilocks area for USO at 75. Let's go ahead and jump to the dollar. I'll do a brief look at TNT and TNX, or excuse me, TLT and TNX. But again, they're not open today, so we're not going to have any fresh data, anything really different from yesterday. But the one thing to look about at the dollar here, and again, you're seeing a doji that makes sense, right? The bond market's closed, doesn't really give the dollar direction, so we're kind of undecided, which is what a doji actually means. Um, are we going to hold this B wave? We do have a potential zigzag to the upside here, which goes a little higher than the original zigzag that started back in that low in September. So that one got us up to just under 101. The next one gets us just above 101. So somewhere in that 101 area seems to be where the dollar is going to go. And as you've heard me say again, in ad nauseum, I do not want to see the dollar much to see it go much higher than that. We do have this wave 4 right here, the wave 5 ending less than 100% extension, likely a retracement back to the previous 4. Well, if we get these zigzags, this would be an extended level for the first zigzag. If that does occur, then we follow the LA wave rule of a wave 5 retracing to the previous 4. That's probably okay too, but going much higher, it will affect earnings in the next quarter. You will hear companies with international exposure, especially if they haven't had a great quarter, using that as an excuse. Oh, we would have made our numbers, but with the currency exchange rate being a negative factor, that's why we missed. They're really good about coming up with reasons on why numbers are missed. But it's a fact that the currency exchange rate does matter. It does affect things. And if we stay in this Goldilocks channel here, I think that would be the more ideal scenario. But it does seem like we need to go a little bit higher here to satisfy these two zigzag patterns. So just a quick look at uh, TLT, which, as a quick reminder, is prices on the 20-year. Prices and yields move inversely. So we had a little bit of a bounce up here after. So we rallied out of the triangle. And so we moved to the upside, and I think that was on the slight chance that the Fed would go 50 basis points in October. They didn't. They went 25, and they were even more hawkish than that by saying we may not even cut in December. We'll just have to wait and see. They're going to be data dependent. Okay, well, how are you data dependent when there's no data because the government shut down? So it could be a scramble to analyze a lot of data, plethora of data, if you will, once the government does reopen in advance of the December meeting to see if the Fed does indeed come through with another 25 basis points or if they make the markets wait until next year. I think it's pretty widely accepted that the next move from the Fed will be a rate cut. It's just undecided if it's going to be December, January, February. When's it going to be? We do know the jobs market, even though we haven't gotten the government's non-farm payrolls number. We've had the Challenger report. We've had the JOLTS report. We've had other private sector numbers, ADP, that have come out and said that the jobs market is continuing to weaken. We just haven't had the government's version, the non-farm payrolls number yet, but the other are in pretty much agreement that the jobs market is weakening. So TLT came down, tested the point of the triangle, once again following triangle breakout rules, and we're just status quo today with a little bit of a dip down in rates from yesterday. And then you can see here the TNX just kind of sitting here sideways as well. Same scenario here. We had a triangle here. You know, we've been loaded with triangles for this entire year on the bond market, at least on the TNX and TLT. We've had consolidations, breakouts, consolidations, breakouts. We had another one here, broke to the downside. We've come back and tested that one here as well. The wave 5 ending. Do we move back up a bit in rates back to the previous 4 before that point when the LA wave rules are satisfied? Wave 5 ends, you go back to the previous 4. That's the one area within LA wave where you take a pause and you wait for the market to give you an idea of what the next impulsive setup move is going to be. Not much else to cover there in the bond market today. So we'll go to gold. We'll take a look at gold, then we'll get to the other markets. Getting a follow-through bid so far from yesterday's gap up. And I mentioned this to our subscribers during the EWO Trader Live show yesterday that you get a whole lot of gaps in GLD based on the way it's traded. So it's an ETF and global. So all those things have to be taken into account in trading gold. So I don't pay so much attention to all these little gaps here in GLD. Those gaps don't function the same as they would in equities or the SPY or DIA. But we did get a bounce up, a gap up yesterday in gold, and we're trying to follow that through. And it's the next run higher. And you can see where the wave 5 is. It's quite a bit higher. So perhaps we got a little vertical here and corrected that move, came back down to the 10-day moving average, gapped up yesterday, a little bit of follow through. If we look at SLV, kind of the same picture here, maybe even a little bit better on the follow through, but the gap up yesterday as well. Same thing coming out of a triangle here, breaking higher. The wave 4 is labeled by this software from hubb.com. And just a quick reminder, if you don't have it and you want to go to that event tonight, just go to hubb.com, hubb.com, get a copy of the software for free. The LA Wave labeling is free. There is an opportunity to subscribe to the AI signals if you'd like, but the software itself is free. And so it'd be great to have that platform if you don't already, if you're going to attend the event this evening. So that's the breakout move there in SLV. We'll see if it continues. I wish it wasn't so vertical. I wish the market doesn't care what I would prefer, but it would be a lot easier if the metals were moving in a 45-degree angle. So after we had this huge rally, we got a bit vertical, we had some FOMO in there, we did all the necessary corrections, and breaking out into the next impulsive move, if this is indeed the wave five, I would prefer to see it more in a 45-degree angle. But again, market doesn't care what my preferences are. It's going to do what it's going to do. We trade accordingly, but we'll have to be a little wary if it starts to go too vertical there. So now let's move on and take a look at the DIA. Didn't quite have the same gap yesterday, just a nice move up, a pretty good follow through day today. There has been some rotation into the Dow. The thing we have to be careful of here is the wave five's already extended 113%. We came back down, tested the 50-day moving average. We did break below that support level at 470, but no follow through day. We broke below it, came back higher the next day. So there was no follow through on the break below 470. Had there been, we probably were looking at 460 as the next stop, but here we are. 2 days into this week, back above the 10-day moving average. And at this point, we'll be watching to see if we can take out this wave five high that happened in the end of October. And then you'll get all the news headlines that the market's at a new high, et cetera. The media loves to popularize those kind of statements, and they always want to have catchphrases, et cetera. But when you get new highs or new lows, it's a golden opportunity for the media to throw commentary out there. Let's take a look at the Qs. A little bit different story today on the Qs versus where we are on the S&P and the Dow, at least at this point in the trading day. Just barely making it back to the 10-day moving average here. We did get the gap up yesterday, but not following through on the Qs today. The high has not even exceeded the high of yesterday. So it's not like, are we wondering if we can hold this confirmation into the close to where it counts as legit? We're not there yet. There has been, NVIDIA, some of the quantum stocks, et cetera, are taking a little bit of a breather right now. Much needed, in my opinion. Valuations did get quite high. So that all makes sense. Let's take a look and see what the IWM is doing with the bond market closed. Remember, we've talked about this so often on how the Russell and the IWM, therefore, are the most rate sensitive of any of the markets due to the fact that smaller companies need to borrow money. So interest rates matter. They watch it closely. And if they feel like rates are too high, they don't borrow. It makes it a little bit more difficult to grow and expand. Once rates are where they consider it reasonable, then they borrow, and then that helps them to grow and expand their businesses at that point in time. But I've argued, or not argued, but opined that I feel like this congestion here, this consolidation following its own run off of the April low has been pretty healthy. We did come down and test the 50-day moving average at the end of last week. Got back above the 10-day moving average yesterday, even though we're not getting a true follow-through day here on the IWM either, just like with the Qs. We'll see if we can break above this 245 level. And if we do we get a follow-through day? And if both of those occur, then you look to see, can we take out this wave five high? And if we do, what happens? Does the five move over to the new high, or does it relabel to a three? That'll be interesting to see if indeed the IWM gets there. It's got to get there first, obviously, before it matters. Taking a look at the crypto space, still nail-biting time here if you're long Bitcoin. As you know, I show the BITB. I know a lot of you like the IBIT. I think they're quite similar, except the IBIT has weekly options. And it's been a wild time if you've been short-term trading Bitcoin. You can see a big move down, quick rebound, move down here to the first fib level, and then can we get back above the 10-day moving average? Yesterday, I thought maybe We do have some resistance at 60. Was talking about it back here on if you were long Bitcoin, at least on the BITB, you really wanted that 60 level to hold. It didn't. We said if it didn't, probably get down to 55 rather quickly, which it did. Now, the nail biting part now is it's an even bigger move lower if we can't hold 55. If we break back down and we break below 55, we go back over here and condense the chart, and you can see how quick the market moved. The ETHW or the BITB, both of them, had big moves here off of those April lows. So there's really no resistance on the way down. So if BITB can't hold 60, then we probably come down here towards 45 rather quickly. That's why I said it's kind of nail biting time. At least have to get back above the 50-day moving average. First things first, can we hold here? Can we get back above the 10-day moving average? Then can we get back above the 50-day moving average? If so, do we break this B wave? Because there is a qualified downward zigzag. Now I call this the dueling zigzags when you have an upward one that's qualified and a downward one that's qualified. It's always interesting to see which one wins. One of them will. One of them will be right. Just always fascinating to see which one it is. And then Ethereum also a little bit lower on the day, also below the 10-day moving average. It has its corridor support here between 27.5 and 25. Same thing. It broke below 27.5 and rather quickly came back down here to 25. There is a little bit of support right here below the 10-day moving average, but you really want to see this. ETHW, referencing Ethereum, hold this 25 level and not break down because it'll be a fairly quickly move down to 20, I would think. That was a pretty vertical move up from 20 to 25. So if you break that back down below that support, um, there's nothing to really stop it before you get back to the full-blown support level of 20. So with that, Zach, I think just go ahead and not as much to talk about with the bond market closed today. We'll just open it up to Q&A. Do have a interesting case study consideration to share with you, and Zach will be back just before the end of the session to go through that with you and show you how to post it on the social media aspect of the platform, which continuing to grow every day. I think it's great. Kudos to all of you for using it. It's the best one out there, I think. The group of people that are involved in it are just really courteous to each other, even in differing opinions. All right, Zach, let's go ahead and take some questions.
Sounds great. Let's get right into it. Got a question on GAP, GAP.
Let's see what that looks like. It is getting towards that retail time of year, so we'll be looking at a lot of these. Happened to go to an outlet mall myself on Sunday, and it was pretty crowded. We have Black Friday coming up. As you are undoubtedly aware, a lot of companies don't wait to Black Friday anymore. They start their Black Friday specials early, and Gap is obviously doing pretty well. It's more than just Gap now as far as the retail brand. But we've got a pretty easy read on this one. The wave four right at 50%, so a good solid 50% correction there. We're moving higher, a little bit above the 10-day moving average. But if you want to go long this, just wait for it to break this wave three high. It's resistance from September as well. So if we break above that wave three high, we could have a nice move coming in Gap again in a seasonably favorable time of year for retailers. If indeed it does show that the consumer is continuing to spend, we have airline flights being canceled, or people going to travel. How is all this going to affect this normally bullish time of the year moving in through the holidays? So some of that is still open for debate, but reading this chart, again, is pretty easy. Can it break above this wave three high? And if so, then I think that wave 5 tap box becomes in play. If it can't, if this resistance holds, then you're probably back down to 22 and a half right in here um, on a pullback. But just watch this over the next couple of days and see if we can bust through that 25 level.
Thanks, Rob. Next up, we have FFIV has lots of insider buying. Is it time to buy some?
That's always a good thing. Insider buying usually goes along with the fact that the principals of the company believe that their stock is undervalued. So that's usually what happens when they step in. Right now, it's in the old trying to catch a falling knife scenario. Had a pretty nice rally up into October, and then boom down, earnings, etc., to the downside, and it's hard to know where that's going to stop. Uh, if the insiders are buying, then they think that they've likely reached a um, fair valuation, one that they're willing to put their money at risk in. We're kind of almost trying to break below this area here of support from the April tariff tantrum low. And if we do that, it's anybody's guess where it goes. You can see it did have a nice 45-degree incline here. That's the great thing about that is when you get the directional moves, the corrective moves aren't that volatile or severe. And then you go vertical, and that's how it works so often. Nice 45-degree ascent, and then the FOMO kicks in, you get a vertical move, and then we have to come vertically back down. But we really kind of need to hold this 240 level on FFIV, and it's tenuous at best. The best thing I think going in your favor, there is a little bit of support here from April. We're a little below the 10-day moving average. We're starting to get some separation between the 10 and the 50-day moving average. And if you haven't heard this before, it's the same thing as my rule on the 10% or the 10-day moving average, excuse me. No security in any time frame gets too far from the 10-day moving average. That occurs between the 10 and the 50 as well. When the separation starts to get a little wider than normal, you start to look for at least a short-term recovery the other way. So since this is a downward move, you would be expecting a bounce. If it was an upward move and they separated, you would be looking for a corrective move. If you're really aggressive, and I usually try to give both an aggressive and more conservative look. We all have different risk tolerances. You know what yours are. Best thing to do is trade within your own risk tolerances because easier to sleep at night. You feel more comfortable. If you're really aggressive, you could take a shot and see if we can hold this level and bounce from here. The reason I say that, because again, it is kind of a catching a falling knife scenario here, is that your stop is right there. So if it breaks below this, then you're out. So when you're looking at making speculative moves, which this would be because the move has been decidedly lower, and you're trying to go against the grain and look for a bounce move, um, you find these kind of opportunities. This is where you want to be speculative when you know that, okay, if it bounces up, it's sold pretty hard. I could get a decent reflex bounce. But if it doesn't, you're sitting right on support, so the risk side is low. So the risk to reward is in a favorable scenario when you have that kind of situation. So, um, yeah, if you are aggressive, then uh, you could step in now. The more conservative approach would be, no, 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 Missouri, show me. Let's bounce up and let's get back above the 10-day moving average. So show me you can hold this level, get back above the 10-day moving average, then I'll step in. So that's the two scenarios there.
Thanks, Rob. Next up, PEW.
P as in Paul, EW.
Yes, sir.
Okay. I say this every single week, but yeah, that's why I love TradeFinder. Is the symbols you guys come up with are not the norms, not the ones that we hear day in and day out, it seems. This one's in yikes land here. We had uh, tried to hold the $10 level, you know, the significance of 5 and 10. an investment company, mutual fund, etc., can only own stocks at $5 that have aggressive growth as their registered investment objective. If it gets above 10, then that brings in those investment companies that have growth and income. Those are allowed to own securities above $10 a share. So it does look like the institutions that were in here trying to hold 10 for a while bailed on this big move down. I'll pull up volume, but I would imagine that's pretty good volume. Yeah, there you go. So there was those big selling bars. So some of the institutions, I don't know how heavily institutionally owned this is. That's something that I would look up in a scenario like this as well. But certainly there was big selling here, and it's down to five. Now, the investment companies that had it at five, are they going to bail too? So far, they haven't. You can see that it's just kind of low volume here. We're going in a bit of a flat line following that big drop, which does occur a lot. You get a big downward move, and the stock tends to stay in a range from there, on the basis of the time strategy that we have at Evo Trader. Um, so as long as those institutions don't bail, maybe we can kind of get ourselves back above five, start working our way back up. But this one's got a lot of work to do to draw in those same investment companies that were in it above 10. When they get burned like that, they tend not to just turn around and jump back in. Like they watch this, they get out because they got under 10. They have to if they're not registered as aggressive growth. If they're just the growth funds, they have to get out, and they're not really that quick to step back in. They need a lot of proof from there. So this one's got some work cut out for it. So first step is it needs to hold five and then start a bit of a drift higher from there and kind of show that it's got some momentum moving back towards that $10 price level. If it can't hold five, this is one where you'd really watch volume. If we start to drift a little bit lower and we are below five, but not too significantly so, but if you start to see the big spikes like you saw here, that would be an exit. We'd have to pull the chart back and see. Yeah, we're in uncharted territory here, basically, literally uncharted territory on this, and that means that there's no support to be found below five. So if it starts to head lower from here, you don't know what to do. I think this one is a wait and see. I don't even feel like there's an aggressive approach to this. This one has some work to do. It needs some time, I think, before you look at going long there. I know when you see stocks that a couple months ago were at $20 and now it's at 438, the tendency is that you want to get in and catch that reflex bounce, but it could take some time before that happens.
Nice little double entendre there with uncharted territory.
Yeah.
NDM, Nano Delta Maverick.
Nuveen dynamic. I don't know what all that is. Municipal, well, whatever it is it's above 10 and a half. Having a nice trading day today. So a nice bit of a move to the upside there today. And we'll see if that can continue. You know what it means. You have to have a follow through or confirmation day. But this is a classic example of what you want to see following a fairly vertical move. You corrected rather nicely. Sideways here, did get back to the 10-day moving average, built a nice base, and now it's trying to move again. So once again, this one's a fairly simple read. 10 and a half is the level. As long as it stays above 10 and a half, if you're wanting to stay long this, I think you're clear to stay long. But if it breaks below 10 and a half, then I would want to exit. The 50-day moving average is right there. And then this move from 975 up to 1050 was fairly vertical. There is a lot of congestion here right underneath 1050, but I don't think you want to fool around with that and wait and see if these lows down around 1030 are broken. Just use 1050 as the stop area. And then to go long, if you're looking to go long, if you're already long, I don't see any reason to get out. If you're looking to go long, one more day. Let's see if we get follow through tomorrow. And then that'd be a good time to step in.
CRWD.
CrowdStrike. I've talked about this one. I don't understand why these stocks aren't even higher in the day and age that we're in now, but it has caught a nice bid since the beginning of September. So we've rallied quite a bit from 400 to 550. So that's a nice move. Looking at a doji, if we were to close at this point today, still plenty of time between now and the market closes. So we'll see what happens into the close. Got a nice little zigzag forming there. It looks like so the start of the impulse move, end of it, just almost exactly at a 50% correction. And so that gives you an extension up to that big round number of 600. And as long as we hold this move above that A wave high, that's where it should go. It should be headed towards 600 on CrowdStrike. It's a tiny bit overbought today off yesterday's move. Um, if it breaks back down below that A wave, you have to be a little careful in case we come all the way back down and test this B. But as long as it holds above where that A wave high is, which is pretty much right where it is now, I think it looks like that one wants to go higher. I think 600 is the target there.
Next up is the symbol that stays in the headlines, Palantir, PLTR.
Yeah, it got um, rough had a rough time on its earnings report. The CEO was out blasting anyone that's shorting his stock due to valuations because they are wild. The valuations are extreme. So that took a little bit of a hit, but people bought the dip. So we had this triangle. Really wanted to do a strangle on this, but the options are just too expensive. So you did get the breakout of the triangle, nice vertical breakout. And then we have those other rules. We move vertically up. When we got too far from the 10-day moving average, what goes vertically up oftentimes comes vertically back down. We retrace back to the 10-day moving average when you get too overbought. And then, oh, by the way, it was a breakout of a triangle. So we need to come back and test the point of the triangle breakout. So it's done all that. And it's trying to move back to the upside. 190 here because that was resistance back in August. And then in this area in early October is the key. So you want to see it hold 190, and then of course, can it break above 200, and then continue to move higher from there. But watch the 190 level. If you're already long, I don't see any reason to get out unless we break back down below 190. If you're looking to get in, you could say let's give it another day or two and see if we can get a continuation bounce higher. We still have this gap here to fill. So we could see Palantir going back up to 200, and then I think we wait. But watch 190. That's going to be key.
And PLTR's, was it CEO or CFO made the accusations of market manipulation, right?
Yeah, wait. He was just he's really outspoken anyway, but he was there were some rather loud short sellers trying to talk his stock down due to the fact that, for one, they're short sellers, but what they were relying on is there is no question it's trading at an extreme multiple. It's 82 or 85 times. I forget which one it is, but it's either 82 or 85 times, which is really high. It's like three times what would even be considered an elevated valuation. So it's in the stratosphere valuation wise. Well, his argument is, well, how can you value it? We couldn't be any busier. We couldn't have more work ahead of us, more contracts, etc., and it's worth it. So he just there's a lot of people. Nobody in runs a company likes short sellers because they're trying to talk their stock price down. Um, and he was even going as far as saying, our stocks made people money. We've had a nice run, and short sellers are just being greedy and they're wrong. And it was just kind of a war of words that came out. But he's a bit more outspoken than most CEOs, that's for sure.
No doubt. All right. I'm sorry, I don't want to take any more time from Q&A. Just wanted to add that context in and hear your thoughts. Next up is going to be COMP, COMP.
No, Compass. Uh, it's also having a nice day today. So this is one to watch. So we're in the single digit area. Tried to get up to 10 back in September. It got there, fell back down. It does look, based on the way this is moving, that there's some institutional buying waiting to come in here. See what the volume looks like. Yeah, it's good solid volume moving off this. And the wave four barely held on. I mean, it got right down to that last fib support at 78.6, but it did indeed hold. We moved higher. We've got a positive 1030 cross. We're above all the major moving averages. The only thing left to do is take out the wave three high, but that's not even as important as getting above $10. If it can get above $10 a share, then as I stated earlier, with the way regulations work, it opens it up to a whole lot more institutions, investment companies. There's a lot more that have growth or growth in income as their investment objective as there is aggressive growth. So I would keep a really close eye on that one. Can it get above 10? Can it hold it? If so, that one could have a nice run ahead of it.
Thanks, Rob. And real quickly, sorry I didn't catch you before. It was for the NDM. It was the Northern Dynasty Minerals. I think it defaulted to NDMO by accident.
Oh, it did. Yeah, sure did. That's why I was looking at uh, the the wording here, the name of the company, and it didn't make any sense to me. So, okay, so here's Northern Dynasty Minerals, and you've probably seen the news that China said they're going to lift some of the embargoes on their rare earth minerals, et cetera, metals, all that. But they didn't give like a wholesale, everything's open. They kind of kept it with a little bit of a hedge there. I would word that. So sitting here at $2.50, nice 61.8% fib level on the way forward, which coincides with the 50-day moving average. That's a pretty good level of support. I do think you want to see it show that it can get back above the 10-day moving average, though, as all this shakes out. You know, all these companies had a bid when China said, we're not going to let you have access to them anymore. And now that that's kind of calming down, um, it took some of the bid away. But this is a pretty good area to hold. I still would like to see it back above the 10-day moving average first, though. But I would definitely watch this one if it shows that it can get above there with a follow through day. Um, Perhaps that wave five is in play, especially with all the support that it has right here. If it can't hold the 50-day moving average, then it's probably coming all the way back down here. Don't really see that happening. I feel like it'll at least make an attempt higher, but just give it 1 or 2 more days and see if we can get above that 10-day moving average. Thanks for clarifying that, Zach.
No worries. AMSC.
American Semiconductor. Uh, Obviously, not a good earnings report. Pretty significant drop there. It had built a nice base here at 60. You can see that was resistance back here in early August, and then it just consolidated there. And then, bam, I'd have to go see what happened on their earnings report and what's going on there. This is another catch the falling knife scenario. We are getting near that 78.6% fib level. Maybe we have to go down there. Maybe we have to test 30 here before some sort of a bounce. Um, what tends to happen when you see stocks that drop like this, and I've looked at trading this kind of a charting look for a very long time, is this sideways stuff. I would expect some backing and filling here. Um, don't know what the options liquidity looks like on this, but my expectation would be some sideways chop for a while here. Let's see what the open interest looks like. Not a whole lot. That's the November options, December. Yeah, it'd be tough to put an options trade on this, um, just because it's so thinly traded. Trying to do a calendar or something. But I think this just needs to go on the burner here for a while and watch it. And if if things go okay, no more bad news comes out, etc. After some sideways chop, oftentimes they'll start to drift back to the upside, is what usually happens. But again, I'd
Symbol.
have to see what the news event was. Go ahead.
No, sorry. Yeah. This next one's going to be symbol QCOM.
Oh, good old Qualcomm. I haven't looked at that for a while. Remember, we used the networks would always go Qualcomm. Is that how they would pronounce it? Um, So sitting at a 50% corrective move right on top of the 50-day moving average here. A lot of these charts we've looked at today are at pretty good levels of support, that if the market is going to rebound, as it appears that it's trying, we're continuing the rally. But again, 2 o'clock's coming up. We'll see what happens in the last 2 hours and especially the last hour. The traders get back from lunch. But um, this looks like that looks pretty good to me, for a potential run back to that 200 level. Um, if you're long this, I would stay long if you're looking to get in. I think uh, even if you're a little more conservative, you could take a shot at this one with this setup here. I would only get concerned if we broke this 50-day moving average. If we break that, then we probably have 15 more points of downside to go. But I think you could step into this one um, right now. DMI is okay. So, yeah, I like that one.
Symbol O.
Oh, yeah, it's been a rough time for the REITs with interest rates, but um, these are tough for me because the options just don't work very well on these. And as option traders, you can see that we're kind of um, chopping sideways. And even with that, just to note that over here on the scaling, um, it's only 2.5 points. So it's not even as volatile as it looks there. If we bring it down to where it's 5 points between the two, which is normally what we see on the scaling over here on the right, you can see it doesn't really do much. So if you're looking for something that, we did that event on generating income a couple of weeks ago, and now they're doing the directional one tonight. Um, Cover all bases. This looks like it would be a pretty solid one for some sort of an income generating strategy like a calendar spread, butterfly, whatever. The negative is that when you have a stock that goes that sideways, there's oftentimes not a lot of premium in the options to create a calendar time spread, butterfly, something along those lines. Um, but if you're looking for something that's going to give you a good directional boost, this is not it. Just sideways churning stock. Yeah, I mean, it should be part of everybody's portfolio. That's what we talked about. And that would be one you could look at, just not really a good candidate from an option standpoint.
Mara. MARA.
Yeah, the miners. Pardon me. Sorry about that. I knew there was something else. I never sneezed just one time, so I knew more was coming. So I know that's aggravating. Sorry about that. Well, this is what you would expect with what's going on with the crypto space, and Bitcoin specifically, since they are a crypto miner. Um, the key here for this chart, obviously, is going to take its cue from what happens in the crypto space, but 15 is a very important level to hold. We're sitting there right now. If we break below that, then we could have pardon me, a bit more downside, all the way down to 10. That's how important it is for it to hold this level right here. Hold this level around 10, and then if it can do that, no harm, no foul. Um, but I mean, hold this level at 15, because if we can hold that and bounce, maybe that means the crypto space is getting better. But if it doesn't hold 15, uh, watch out below, because we're probably going to see 10, and that wouldn't bode well for what's going on in the crypto land either. So this could be a good indicator of how things are playing out, but that's a pretty important level to hold there at 15. It would
Thanks, Rob.
actually be a good short if it broke below that level.
Yeah, indeed. Um, yeah, time for one more symbol before we head over to the case study consideration.
Yeah, do one more real quick.
SMCI.
Yeah, my one of my favorites for the end of the year run. We've had a pretty big downward move here, and for it to stay one that I really like, we got to hold right here at 40. You can see that's key, but we've had a pretty vertical move down. We're below the 10-day moving average. Pardon me, throat gets dry and talk a lot when the heat's on. It dries out my throat. But the 40 level is key. If we can hold here and bounce, then we could have a nice run into the end of the year. If it breaks below 40, then that's all by the wayside, and we're probably coming down to 30. So we're at the line in the sand right now. If it bounces here, it could have a nice bullish move. If it doesn't hold here, then it's a short. That wave three could continue all the way down to 30. So keep an eye on the 40 level. That's going to be key. How we handle it right here. You know, last time we got here, we went sideways for a few days and then had a nice run. It could do that again into the end of the year, but it's got to hold the 40 level first.
Thanks, Rob.
All right. For the case study, we'll get into that real quick. We're going to do the biotech ETF. IBB is the symbol. It's had a pretty nice bid here, as you can see. And we've got, looks like round two here on the DMI. We had the ADX kind of level off around 40. It's trying to tilt back up. We're getting good separation between the two directional indicators, having a nice move today. I think we're not there yet, but we could be getting into the tractor beam effect here. But I think for a number of reasons, one being, even if the market stays a little bit squirrely into the end of the year, the Fed doesn't come through with the December cut, et cetera, this can be a quasi-defensive sector here. So it could continue a nice bullish run in the wave three, or it could be a good place to hide a little bit if we get some choppiness in the rest of the equities market. So I like IBB to continue higher here.
Alrighty. And is that going to be an official idea this week?
Since we don't have a specific target, we're just going to call that a post. So,
Okay, no worries at all. In that case, just we're a couple minutes after time. I'm just going to drop that link to register in the chat one more time for tonight's event at 8 p.m. Again, as Rob stated, even if you're not able to attend live, please feel encouraged to register for the event, as you will receive a recording totally free to sign up and register after the live event is concludes. So again, if you can't attend live, go ahead and still register, and you'll receive an email of the recording shortly after the live event is over. And for those that are able to attend live, we look forward to seeing you there. It's going to be a very insightful and exciting presentation.
yep. All right, everybody. As always, thanks for spending some of your day with us. We appreciate your time very much. A couple things to remember. We've got a lot of charts that we're looking to see if we can get follow through tomorrow. And just keep in the back of your mind, the bond market's closed today. So what does that do to the equities market tomorrow, if anything? But it could change things. So I'll be watching how the bonds perform and how the market responds to that once it reopens. That'll be key. So enjoy the rest of your afternoon, hopefully see everybody tonight and look forward to talking again soon. Take care, everybody.